Hey, hi everyone. Welcome to another video. So today's topic is, what are the trading strategies that we can use to win prop firm challenges and scale our account from 100K to $4 million funding in popular prop funds like Blueberry Funded Next, Funding Pips, etc. And we'll go through, these strategies and details about these strategies and examples also of these strategies. Okay. Yeah. So before we go through the high probable setups that will allow you to win the prop firm challenges and scale your account, we need to understand what we shouldn't do. I already had a video where I discussed what are the prop firm rules and what are the things that you are not supposed to do. We went through that in prop firm match actually. What are the rules and regulations of each prop firm? But yeah, just a recap of it. Some prohibited strategies we should never use, like martingale, grid systems, hedging, HFT, or broker arbitrage. These we should not use because these exhibit high risk, tactics. These are high risk tactics, and they demonstrate lack of discipline and consistency, and they also violate drop down position size and strategy rules. Okay, so those you should always avoid. But yeah, let's come to the topic, which is high probability strategies that can help you in passing the challenges. Okay, so the first one is a modified pullback strategy, which is a trend pullback strategy. So right, the market doesn't move. If it's a bullish trend, it doesn't move like in a straight line upwards. The way the market moves, this is based on research. Okay, this is based on research, and it's based on a lot of years of research that the market moves in wave form. Okay, so it moves up and then it retraces to a certain extent, and then it again moves up, and then it retraces and then it moves up. So this is the standard. This is also called Elliott wave theory, where the market moves up, it retraces to a certain extent, and then it moves up again, and then it retraces. So this is how the market moves. Uh, okay. And this strategy, which is a modified pullback strategy, the trend pullback strategy, is if you identify the trend, okay, which is a bullish trend for suppose, then you enter the trade when the pullback is happening. Okay, so the market went up from A to B, and then B to C it retraced, and from C to D it will go, and from C you found that some candle has shown that that now the market is headed for the upward direction, retracement is done, then you take that trade at that particular place of the pullback. So that is what is called as a modified pullback strategy or a trend pullback strategy. This is successful, 70% success rate it has, and this modified or trend pullback strategy. And to use this strategy, what we do is we define the trend on a 30-minute chart using 200 EMA. So what you need to do, how do you find the trend? 200 EMA. It's above, the market is above 200 EMA, it's a bullish, below means it's bearish. 30-minute chart for clear signals and to reduce noise and to identify the trend properly. Okay, and then you put a smaller EMA, which is a 20 EMA also on the chart. And what you do is you wait for the market to pull back to the 20 EMA or some support and resistance. Okay, and then you enter after price rejection, which is either a pin bar or an engulfing bar. Once it is formed at this 20 EMA or support or resistance, then you basically enter the trade there after price rejection, and that's you just set the stop loss beyond that, at that pin bar low, and you enter the trade. Okay, or you can enter just beyond the swing also. Okay, and aim for two rewards. So that also you could do. So if the market moved up like this and retrace like this, then you could put the stop loss here, or if there is a pin bar here, you can place it here also, and you can target it to a two or reward. Okay, so that's a modified pullback strategy, and this works. Okay, this works. This is basically price action in yeah, you're using price action to trade. Next one is range trading during consolidation. So it's ideal for low volatility period. So when the market is not trending, right, either up bullish movement or bearish movement, then what happens is market stays within a range. It's like a box or a range. The market stays. and there will be a support and a resistance, and market, when it goes to resistance, it takes a resistance and comes back to support, and when it comes to support, it takes support and goes to resistance. So it's like there's a support and resistance and support line, and market just moves between these support and resistance line in a range. Okay, so this is called a range, and this is phase is called as consolidation phase. Okay, so during that phase, what you could do is you could do range trading. This happens during low volatility periods. Okay, and what you can do is trade near range boundaries like support and resistance. Like whenever support comes, you take a buy position. Whenever the market comes to resistance, you take a sell position. But you confirm this with RSI overbought or oversold also. That's an additional confirmation you do, and then you keep targets inside the range to avoid false breakouts. So what you do is, once market comes to resistance, once you see RSI indicator, and then a red candle formed, you put the stop loss here and you enter here, and target would be the support. Similarly, when market comes to support, you see a green candle, you put a stop loss below it, and your target would be the resistance. So that is range trading during consolidation. Next is the breakout strategy. It's a simple breakout strategy. So once market is it's in consolidation, right? It breaks out of that range after some period of time. The consolidation is where buyers and sellers are fighting each other, and there is no clear winner. Okay, when there is more buyers, right, then the market breaks out to the up, or when there are more sellers, so then the market breaks down, and that is what is called as the range breakout strategy. So this is a simple breakout strategy, and when the range breaks, it generally becomes a trending market. So you wait for breakout of that range, or a triangle consolidation, or rectangle consolidation, the range consolidation, or a triangle consolidation, and then once it breaks, right, you take a volume, you confirm it with volume spike and trend alignment. You also validate it with volume spike, and basically you put the stop side inside the consolidation zone, or use a trailing stop loss, and you trade it. So the strategy would be basically, this is the range for suppose, and a breakout candle appeared here, you put the stop loss here and a target here, and you enter a buy position here, capturing on the trying to capture the range breakout strategy. Similarly on the downside also you do. So this is a simple range breakout strategy. Okay, so what we discussed: pullback strategy, trend pullback, range trading during consolidation, and range simple breakout strategy we have discussed. Then a trend following and swing trading strategy. So this is applicable for multi-day and mid-term setups. So this is more of a positional trading. Swing trading involves trading for weeks to months. So it's then generally done in a daily time frame, or like a 4 hour time frame. Okay, not done in lower time frames. So you use your daily or 4 hour chart to define the direction here, and direction when he means you see the price action there, and fine tune your entries using 30-minute and 1 hour. So you use the daily time frame to define the direction. So if the market in the daily time frame is moving up, then you look for a buy position on the 30-minute or 1 hour chart. Okay, and you can use other additional indicators like MACD or moving edge average crossovers for additional confirmation. And then you basically put a good risk to reward ratio. Okay, so this is a swing trading. Risk and reward will be high. Okay, and probability of winning also will be high in swing trading. Okay, so that's a swing trading, which is the trend following strategy. Okay, so what happens is, in swing trading is, you follow the trend. Basically when the market is moving up, you try to capture that entire momentum, and you know that direction by using the daily chart, and you enter into the trades at the 30-minute or 1 hour chart, use additional confirmations, and achieve a good risk to reward ratio. Then we have momentum or volume breakout strategies. So momentum is, suddenly there will be a momentum within the market, like entire range, the market was moving, then a breakout happened. So that's say, momentum. The momentum will be there at that particular time, or a short covering is happening. All the people have thought, that the market will they have shorted the market basically, but the market went against them to the upside. Then all the sellers want to exit their position. The market will move very fast during that time, which is called as a short covering. Okay, so this momentum trading or volume breakout trading is also one strategy that we could use. This allows you to capture quick directional moves, and you confirm this with strong trend plus with volume breakout, and you maintain a tight stop loss and dynamic trailing exit to make profit out of this strategy. Okay, yeah. Risk management you need to follow. So those are the strategies we went through. Trade risk and position sizing is risk only 0.5 to 1% per trade of your capital, and position size is 0.25 to 0.5 percent when funded. Okay. This is a risk position sizing 0.5 to 1% per trade during challenge phase, 0.25 to 5 when funded, and ATR based stop loss you could use for stop loss positioning. Okay, yeah. Then daily drawdown and daily limit rules are daily loss limits are 4 to 8% depending on the firm. Total drawdown is capped to 8 to 12%. Okay, so stop trading once you hit 50% of your daily drawdown and take a break if you're nearing 75%. So if your daily loss limit is 4%, stop trading once it hits 2%. Okay. Risk to reward ratio, have setups which have 1:2 risk to reward ratio or 1:3 risk to reward ratio, and win rate of 50 to 60%. Okay. In that case, what happens is strong winners will offset the losers. Daily routine and psychological discipline. So you need to have some pre-market planning. You need to read the economic events because this is forex trading, and in all those firms you will be trading XAU USD, or you will be trading a currency pairs, or you'll be trading US indices like Nasdaq 100 or S&P 500. Those you would be trading. So try to be up to date with the news, economic events, key levels, and have some defined setups, and follow those setups with discipline. Okay, and routine, and habit to make it a habit. Psychology should be whatever you took the trade. If loss has come, exit that trade no matter what. Okay, and have a proper general entries diligently put. What is our setup, what happened when we took the trade today, how the execution went, and what is our psychology for this particular thing. Yeah, if you want to avoid psychology and all that, you can put an algo, then that entire psychology piece will be removed. You put in algo will execute it. Okay, so avoid impulsive trading. Trade only A plus setups, only you trade, and be patient till the setup comes. Okay, don't do impulsive trading, and don't do trading based on emotions. Okay, you record everything what your emotions are. If you're doing manual discretionary trading, then you need to put a journal, put the recording, all the setups you need to record, and what you are going through you need to record, and avoid impulsive trading. Okay, only trade the setups. Be patient, control stress, don't stress out. Take only the loss that you can bear. Okay, avoid trading after hitting daily loss threshold. Okay, this basically says only those traders make money who are disciplined and emotion free, and who avoid this revenge trading and focus on consistency and process. That is true. That is true. Okay, and some examples we'll go through, strategy examples by asset. So forex pairs, gold and crypto. These are examples. Pullback trades on XAU USD using New York London overlap. That's a session overlap. When pullback trade is taken on XAU USD, uh, it generates only 1 to 3 trades per day. Okay, then you enter at the trend label levels with minimal slippage and strict risk reward. So this is an example of a strategy. What you're doing is you're using a pullback strategy, and during the New York London overlap, and you'll get 1 to 3 trades per day based on this setup, and then you enter based on that strategy and have a strict risk to reward ratio for forex pairs, gold and crypto. Futures, Nasdaq E-mini 100 or all those. Opening range breakouts is an example. Morning opening range breakout trades or pullbacks to 200 EMA on a 30-minute before trend continuation. That also you could trade. Risk small contracts with tight stops. That could be done. Okay. Or general instrument stocks or indices if you are trading trend alignment. So trend following you could do across daily H4 and 30-minute charts. Enter only after multi-time frame confirmation. Yeah. Before you do all this, what you need to do is you need to rigorously backtest your strategy on historical data. Apply these firm rules like drawdown daily limits. Test that in demo account. Enforce that this is the challenges, profit targets, and loss limits. Then see how the results are, and forward test also under real prop rules using bar replay or forex tester to gauge real execution and emotion readiness. So summary is best summary strategies are trend pullback. Entry criteria is when the pullback happens, a reversal signal happens. Swing high or low is a stop loss. 0.5 to 1% is the risk per trade. Target is 1 is to 2 plus. This combines strength and safety. Range fade, so boundaries range within range trading. At the boundaries, you will trade with RSI confirmation. Okay, stop loss will be outside the range. 0.5% is the risk per trade. 1 is to 1 or 1 is to 2 will be the risk to reward. Works in low volatility environments. Breakout trade, trade consolidation, volume breakout happens, then you trade it. Inside range will be the stop loss. 1% max is the risk per trade. Trailing to 1 is to 3, risk to reward. Capture directional moves in this. Momentum multi-day, trend confirmed across days. ATR based stop loss you'll have. Smaller risk per trade. 1 is to 2 is the target. Risk to reward. Patience plus strong winners. This is the strategy. Okay. So some of these tips are stick to the process, not to the profit chase. Be okay with waiting for perfect setups. Treat losses as learning. If rules were followed, move on. No impulsive scaling or move off feet from the plan. Okay. Real world ready insights are risk management is key. Only trade high probability setups. Be boring, consistent events. Risk only 0.25 to 0.5% per trade. Final thoughts are no single strategy guarantees success, but discipline and consistent trade execution with strong risk management does guarantee success. Some of the strategies which are high probable setups are trend pullbacks, range plays, breakout setups, momentum strategies, which will minimize drawdowns and increase win probabilities. Always operate within the from rule boundaries, strict position sizing, drawdown limits, and permitted instruments and time frames only. And focus on the process, not profits. Risk control strategy that you need to follow for the funding success. So with this, what I want to do is I want to show you what trend pullback is. Okay, so let's see. So this is the funded next account. Okay, so if you okay, I need to connect. So what is a trend? This is XAUUSD. This is a demo account. Okay, so I just wanted to show you. So see 200 EMA. Then what is happening is okay. So this is clearly a downtrend. Okay, so downtrend retracement. So here you will enter. Okay, this is the stop loss. Here you will enter. This I think is 20 EMA. This is 20 or 5 EMA. I'm not sure. This must be 5 EMA or 20 EMA. Sleeps 5 EMA. So that's a 5 EMA. Okay, you can put 20 EMA also here. But yeah, here it is 5 EMA. So you will enter here. So downward direction, then a retracement, and then you will enter here. You will make money. Okay, then downward direction, then retracement to the 200 EMA. You enter here or here after retest, and then you'll make money till here. Okay, then the trend has changed here, so this is upward direction now. So now you look for up moments. Okay, so it's upward movement, then retracement, you will enter here, then retracement, you will enter here, and like this is the retracement strategy. Okay, so what is the consolidation strategy? So if you see, this is the range, so this is all the range, right? So from here to here, this is total range. So during that time, what you will do is you'll put a resistance here and a stop loss and a support here. Whenever it comes to support, you enter a buy position. Whenever it comes to resistance, you enter a sell position. That you could do. And once the range is broken, like this particular range is broken, then you can take that range breakout strategy you could take. Coming to the daily time frame, if you want to do, so daily time frame if you want to do, then this is clearly an uptrend. Okay, so this is clearly an uptrend. So either here, whenever it touches this 45 ma, you need to take a trade, retracement trade. Okay, so this is what swing people do. They will enter it, buy on dips basically. That's what they'll do. And now this is all range. Okay, so here you could use the range strategy. Here this is all range only. Okay, this is all range only. So once it breaks the range, you can look for a breakout, or you can use the range strategy here. Okay, so this is what they do in a swing trade. So this is the gold, right? Similarly, you could do it on other indices also. Nasdaq, let us see. See, Nasdaq is an uptrend now. But if you see for few days before, it was in a downtrend. So here you enter, here you enter, here you enter, here you enter. Okay, like that. And again, this is trend reversal. Okay, so now again, once it goes up, here you enter, here you enter. This is all range is happening now. Okay, SPX 500. This is in a uptrend again. Okay, same again. This is also same, same. SPX 100, US 30. Same. This is in a downtrend. US 30. It's retracing the 200 yen. UK 100. UK then uptrend. Yeah, so that's how you can trade, guys. So that is the high probable setups and funded that can be used for from challenges winning. Yeah, that's it for today. Thanks everyone. Have a nice day. Bye.